This is Dan, and I'm going to give you 5 reasons why people sometimes are upside down in a home loan. By upside down, there's also referred to as underwater, which means a homeowner owns more on the mortgage than the current value of the home. Okay, we're going to start with number 5. Poor home maintenance or a neighborhood in decline. Now, this could be just having your property just letting it go, not cutting the grass, having structural problems. Also, it could be, for instance, your whole neighborhood gets hit with a flood, but your home is okay. But you're still in the same neighborhood, and it's still going to bring down the value of your home. That's happened before. You get someone who buys a brand new home, everything's wonderful, and bam, all of a sudden a flood hits. Again, it doesn't touch their home, but just being in the neighborhood, their value goes down. Why? Because a lot of people might sell, or a lot of people might not have flood insurance. Okay. Number 4, taking out a second or a HELOC, meaning they're taking additional debt on the same property. When they increase the debt, they're basically making their homes an ATM, cashing out and refinancing every couple of years. That happened in the early 2000s. And what happened by 2008, 2009? Well, people just kept tapping into the equity until they had no equity, or they were upside down or underwater in the loan. Some people just walked away. Okay, number 3, using a small down payment. Right when you started, you have low equity. You have a high loan to value. All of a sudden something happens and the market has a sharp turn. All of a sudden you're underwater, meaning you owe more than the home is worth. Okay, number 2, high interest loans or an ARM, an adjustable rate mortgage. Again, 2008, 2009, people got stuck in those ARMs. They were great for 1 or 2 years. They were teaser rates. Well, all of a sudden, that interest rate shot up, and oh my goodness, the payments were unsustainable. The high interest, they couldn't make the payments, and now a lot of them just had to be foreclosed on, unfortunately, plus the recession. Okay, number 1, declining property values. What happens? Yeah, a recession hits again. Everyone has to sell. Your home, it's saturated. Everyone has to put their home on the market. Go down the streets, and all of a sudden you have 5, 6 homes for sale. Well, guess what? The property values are probably going to be lowered. That's what happens when you have oversupply, supply and demand. It's not what you think the value of your home is. It's what someone is willing to pay for it. Now, there are many factors that go into being upside down in a home loan. But I try to tell people, including myself, is live below your means. If you overextend yourself, it might not be worth buying that home. That dream home could turn into a nightmare. Well, if you can, please like and subscribe in the comment section below. Again, don't hate on me. I'm just a man with a mullet and a dream.